Good afternoon and welcome to the Channel Final Bell on the Rural Radio Network. I'm Chad Moyer. Joining me today, it is Mike Zuzolo from Global Commodity Analytics. We're going to break down the day's trade. A few news items to talk about here today. We'll hit on that and a lot more. First of all, Mike, just wanted to look at the settlement prices here. May corn is going to settle 5 1/4 higher. July was up 4 3/4. December up 2 cents. May soybeans had an excellent second half of the day, up 12 3/4, settled out at 10.53. July was up 11 3/4. November up 8 cents. Even pulled the wheat a little higher. May was unchanged, but July was up a half a penny at these settlements. I guess from when we talked in the middle of the day, halfway through the trade, what kind of changed between then and the end of the session, Mike?
Yeah, I think the big thing that changed, Chad, was we had talked about midday, Japan coming in and potentially buying more U.S. beans, as they too are talking to us right now ahead of a big visit next week here to the United States related to the trade. That's the good news. But Japan can't really replace China. But the trade was just looking, I think, for good news. In other words, Japan maybe can take on another 1 million metric tons of beans that they wouldn't buy from Brazil and Canada and give us more of their business. But we've already got about 65%, of their current business. That compares to 24, 25, 27 million metric tons of Chinese soybeans that we sell to China. And so I got to thinking, that's probably good news in terms of rhetoric, supports the market. But was there anything else out there? And then when I started looking at the product markets, which both products had very poor weekly export sales, especially the bean oil export sales, we actually saw the bean oil as the leader to the upside of over 3.5%. That makes me think maybe we've got a deal getting reached with India as far as big biofuel, or maybe we've got an SAF domestic policy situation getting ready to be unveiled. I don't know what it is exactly, but it seemed like the bean oil was in touch with something and really helped lead that soybean market to a new 2.5-month high. And that was very needed, given the fact that we've had some good positive news this week.
Yep. Mike, since Japan was kind of in the headlines today, could you put a little perspective on that market for us? How valuable is it, or what is the potential there, especially as it relates to these trade discussions that we're having today?
Yeah, it's much more important when it comes to the market share of our meat exports. I mean, Japan is our number one beef buyer this year and last, taking around 22 to 23% of all of our calendar year exports of beef. And that's followed by South Korea, China, Mexico. It's up there in terms of pork as well, Chad. And, it oftentimes can take on quite a bit of wheat purchases and sometimes quite a bit of corn. But as far as soybeans, it's not a big player. And I think this goes back to, why is Japan so important, to your question? Well, I think it goes back to this trade chess game that we're playing right now. We have to realize that both China and the United States are vying for the same country's business at this point. And so the big countries to take on and get bilateral trade agreements with before China can is Japan, South Korea, India, and the European Union. And there's some others that go on down the line, like Vietnam and Thailand. Those are important as well, especially for the poultry and feed sectors. But you need to get some of these trade deals done before China can, because then whoever gets the most trade deals done essentially has the most leverage to get the other side between the U.S. and China to the table. And I think that's really what it's come down to. So Japan, South Korea, and the European Union would be very nice. To me, India is kind of the major one to go after, because not only is India just as important as far as the size of the potential market, but it's really the next China as far as population and potential growth in GDP. If we're going to have another commodity super cycle, in other words, that China gave us, I really think India is the answer there.
Okay. There was a White House press conference earlier today, and I believe there were some trade things that were brought up there. Anything we should be aware of?
Yeah, it sounds like that we're getting closer in terms of some key European countries. The Secretary of Treasury specifically mentioned also that he had just left a South Korean meeting I'm not sure if it was by phone or if they were physically over here, but he said, I don't want to get ahead of it, but it's going better than I thought, and we could potentially have a deal next week with South Korea. So all these things adding up with the return of a weaker U.S. dollar, I think really this week has been about demand. The trade, I think, has tried to put away the planting issues and the drought issues, with the Western Corn Belt being too droughty and the Eastern Corn Belt being too wet and not getting planted. They've tried to put that away, and they've tried to put away the hard red wheat belt drought as well and focus more back on the demand side. And I think this was a really good day when it came to that kind of information.
Okay. You said before soybean oil was the percentage leader up. Nearby contract was up 174 at the settlement. Was there any specific reason for that, or could you point to as to anything why that was the gainer, the leader today?
No, I mean, canola at the ICE was up about 2.5%. So it was clear that the U.S. soybean oil was the one that took the leadership to the upside. The only thing I can guess, as I said, is maybe a policy shift towards more sustainable aviation fuel, or maybe we're going to get a deal with India. I would say also about that soybean oil market being as high as we were on the close today, if we could close out the week tomorrow this high, Chad, this would be the first close above the 100-week moving average since August of 2023. I'd also note that the November beans had an outside day higher close. What that means is we took out yesterday's low, and then we took out yesterday's high and stayed above yesterday's high on a closing basis. That could mean, technically speaking, that we might be getting back towards that mid-April high of around 1040. I mean, this is one of the best chart days that I've seen in probably 3 weeks when it comes to the soybeans, the soybean oil. The meal was a little bit of a dog again, but I'll give it another day to turn it around.
All right. Mike Zuzolo, Global Commodity Analytics. Stay tuned. Second half of the Channel Final Bell is coming up next here on the Rural Radio Network.
Available supply. And with farmers holding tight right now on their cash sales, I think that has extra importance. And so we want to keep the market and the trade thinking that the demand is outstripping the supply, because that old crop pulling up the new crop is a sign of a healthier market most of the time. And I noticed today, in the July Dees corn spread, we were able to make a new week and a half high in that complex. That's very welcome news, because we've been kind of going back and forth in that spread in a 4 or 5 cent trading range. That's one of the key, I think, technicals to be watching, because that spread technical also, as I kind of allude to, depicts the fundamental sentiment of the market at the time. So corn, to me, is the leader to the upside. It has been for many, many months now, and it clearly had the best weekly export sales, coming in at another 1.1 million metric tons, top end of the trade range, up 1% on the 4-week average. We're still seeing that demand stay very, very strong in the corn. I'll tie that back together with the weather. Some of the later models this afternoon, both the GFS and Euro, are starting to suggest maybe that Eastern Corn Belt that's been inundated with rain isn't going to get back in the fields as easily as we thought.
Okay. Switching over on the livestock futures, much less volatile day, narrower ranges in cattle and hogs. But you mentioned the export sales report. Boy, not a very good report for the hogs today, was it?
No, it really wasn't. And, we saw once again how at the end of the day, with those soybean markets starting to come back around, how the hogs were able to turn it around a little bit compared to where they were earlier on the session. Hogs actually able to find a little bit more support than what I was expecting, finishing up about 15 cents in the May versus down 15 in the June. And what my expectation was a much sharply lower day, potentially because we had a marketing year low in pork export sales. That really is a very good piece of the puzzle when it comes to the U.S.-China trade relationship, Chad, because we saw specifically China reductions of U.S. pork of 12,000 metric tons. That is a big piece of meat when it comes to reductions on 1 week. So we are starting to see some of the impacts of the U.S.-China relationship and trade not going as well as we want it to.
Yeah. Any thoughts on maybe why it was a little bit more subdued in the cattle futures today, Mike?
Yeah, the cattle were pretty sneaky, because the April fats went up about 213 and realized that new record high from yesterday was about 213.60. Was sitting right around that level most of the day, and it seemed like it was waiting for new news. And I would say even the grains kind of acted like that early in the session. Well, then we started to see the Wall Street markets kick into gear. I actually think that South Korean news from the Treasury Secretary helped us as well, because, as I said, they're the number 2 beef importer for the United States. And so we were able to make new record highs in the front end live cattle to 213.77. Didn't go above it by much, but it keeps the positive momentum intact. One of the big things I think also helped was negotiated cash has finally gotten established in the cattle market. It looks like 210 looks like the bottom end, 212 plus looks like the top end. That was something we really needed, given that the April fats are already at 213 plus. So that was nice to see, along with the firmer box beef market.
As we wrap up our conversation for today, what are your thoughts about just risk management in general? You know, we haven't talked about basis or anything like that, you know, especially as we're focusing on the planning progress. So what are the keys to risk management?
Well, yeah, the basis has been extraordinarily wide compared to the futures market. And I think especially in the Western Corn Belt, that's a really big piece of the puzzle this year. And I think doing a better than average job marketing versus a weaker than average job marketing. I would end it this way, Chad. I really want to take this opportunity, if we can continue to go higher, to get hedges in place, finish up on 24 sales, get some 25 sales on the books, because I think the May report, based upon what I've heard from USDA and talked to them directly, these tariffs are probably going to show up in the May WASDE report. The WAOB will probably reflect whatever the tariffs are at the time of that report. So we could see some demand lightning in terms of lightening up on demand side and exports due to that. So keep that in mind. That's something that a lot of people don't realize.
All right. Thank you so much, Mike Zuzolo, Global Commodity Analytics. His website, globalcomresearch.com, globalcom with 2 M's, research.com. Do remember, trading of commodity futures and options does involve substantial risk of loss and might not be suitable for all investors. That is today's Channel Final Bell. It's brought to you by Channel and your local seed pros. Here on the Rural Radio Network, Chad Moyer reporting.